Well, here at Bloomberg, we use the power of the terminal to run some numbers, see who qualifies as a Bloomberg Best. We look at all kinds of categories, from top fund managers to top economists. Chuck Meyer's name popped out as a small-cap investing star. He's a portfolio manager at Fidelity Investments. The small-cap value fund he manages ranks in the 96th percentile, or at least it has for the past year. He joins us now from Boston. Chuck, glad to have you with us. What do you make about investing in small caps right now? I mean, why does the average investor have to have exposure to this group?
Well, I think if you look at a long-term history of returns, small cap value in particular stands out as a leader amongst all of the different categories. And I think, over time, every investor should have some exposure to small cap value land.
Now, we're looking at the valuation for the S&P 500. Some people say that the stock price, the index price, PE ratio has gotten much too high given the outlook for earnings. Can you take that argument and relay it to small caps? I mean, are these stocks too expensive right now given future earnings expectations?
Sure. I don't think that small cap value stocks in particular are at any extreme, whether cheap or expensive. Something to keep in mind is that from the peak to the trough for the Russell Small Cap Index, the stock index was down 60%. Since that trough to the current day today, we're up 60%. But to get back to where we were in the middle of '07, the stocks would have to go up another 60% just to get there. Now, that says nothing about the valuation, but it does say something about the expectations that are built into the stocks. And I think when you look at the companies today in general in small cap value land, you see companies that have, expectations that are probably reasonable for a longer term perspective. I don't think anyone knows what's going to happen over the next few months with the economy, but I think if you have a medium to long-term philosophy of investing, you'll do just fine.
Now, Chuck, one of the secrets of your success in the past year has been you seem to have avoided a lot of the dramatic moves in energy and in some commodities products. Are you revising at all your investment strategies in these areas?
Well, I think if you look at the core strategy of small cap value fund at Fidelity, it takes the best of the research from the small cap analyst team we have, which is unparalleled, and the background of the broader Fidelity Research Department and the best-in-class trading platform. And you look at and see what the best opportunities are. And I think, right now the fund is focused on areas such as banks and financials, which have been the laggards this year, whereas the fund 6 or 9 months ago was focused on home building and auto dealers, some of the out-of-favor categories 6 or 9 months ago. So the fund is consistently looking for stocks and sectors that have lower than average expectations, and then we utilize the expertise of the research department to really parse through those names and figure out which stocks are there for a reason and which stocks are unfairly undervalued. And I think that's what we're trying to take advantage of.
I was going to say, when you talk about banks, I mean, a lot of people might ask you, wouldn't you be scared off about some of the names?
I think that's exactly why we're interested in them. When we think about stocks, we're looking for margins of safety. We're looking at differences between price and value. And I think generally when you have a company or an industry where expectations are very high, you don't have that margin of safety. In banks, we're analyzing credit extensively. We're looking at the balance sheet to make sure we're comfortable. But I think because there is fear still in that part of the market, that's exactly where, as an investor, you want to be focused.
And can you actually trust the balance sheet figures? I mean, a lot of people say that some of the banks, especially the larger ones, which don't apply to you, but have been able to hide a lot through accounting irregularities.
That's exactly why you need a margin of safety. I think everyone who's invested in financials over the last year, with no exception, has had mistakes, myself included. But I think what you need to do is you need to say, well, what's implied in the share price today versus what is a reasonable expectation for what the earnings might look like 2 or 3 years out. And as long as you can get comfortable that the share count won't change for those companies, I think that's where you want to be focused.
Chuck, we've been talking a lot about the U.S. Is there anything overseas in small cap land that's catching your eye?
Well, over the past year, small cap value has had only one major foreign position, and that's in Japanese small cap stocks. If you're a Benjamin Graham follower, you would look at the Japanese market. There are a lot of net stocks in Japan. Certainly, there are a lot of impediments to achieving that value over time. But the fund does have a reasonable, mid-single-digit percentage of the fund in Japanese small cap stocks.
Chuck, we thank you very much. Chuck Myers.
Thank you very much for having me.
He is a small cap investor at Fidelity Investments.